You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. If you're paying $0 to trade options, you're paying too much. That's because at public.com, you can go a step further and earn rebates on every single contract traded. No commissions, no per-contract fees. That's table stakes. When you place an options trade at public.com, you not only don't pay, you earn a rebate. And those rebates can add up fast. Public is the only options trading platform where you can earn rebates. You literally won't find a better deal. So, switch to Public and start getting rebates on every single contract traded. Or stay with your current options trading platform and leave money on the table. The choice is yours. Public.com. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the world of vol? Let's find out together, shall we? It is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are mainlining. If you want to join us live in here, get in there on the pro, theoptionsinsider.com/pro. Chat is hot. They're excited. They're ready. They're ready to talk some vol today. We've got Nichols saying Vol Views Friday, baby. LFG. I'll just leave it at that. I'll do the family-friendly version of it there, as well as folks excited the show is on, ready to go. Yeah, I'm excited too. I'm pumped. I'm feeling that Vol Views juice. You know, it just infuses the network whenever it's Vol Views Friday. Of course, if you want to join us for that, you want to get access to options oddities after Vol Views, which, if I do say so myself, has been quite the banger of late, man. Just wild stuff going up on that show. Quantum straddles, just madness. Talked about Cleveland Cliffs last week. That was a banger. All sorts of madness out there. One of the juicier covered calls I've seen in quite some time. Check it out for yourselves. theoptionsinsider.com/pro is the place to go. I'll get you past the velvet rope after Vol Views. You can join us for oddities and, of course, pro Q&As. We're coming up on the February Pro Trading Crate. Hard to believe. So get your name in the hat. Couple of weeks left. You want to win one of those in your trading life. Trust me, they are pretty freaking cool, if I do say so myself. Even though every month when I see what's going out the door to our members, I'm like, oh, we're giving that away, huh? That's pretty cool. We could probably sell that. But nope, we give it to you folks. Take advantage of my foolishness. theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on the old Vol Views show this week. First, let's go in order. Let's go in order of proximity to the studio. I do believe, let's see. Let's go first to the quiet hinterlands of Chicago, or maybe he's down in Indianapolis. I don't know. Let's find out, where we are joined once again by the once, future, and present Dr. VIX, a.k.a. Mr. Russell Rhoads. Mr. Rhoads, welcome back to the show. Where are you beaming in from today?
Oh, I'm at home. I'm in the suburbs. I'm at home. So there. Got nothing else exciting to tell you. I'm trying to find it on Twitter. Earlier this week, somebody on Twitter referred to me as the Joe Biden of VIX.
Oh, is that good or bad? I don't know. I guess it depends.
I don't know. Well, if you look at the profile of the person that said it, you're like, yeah, let's take that with a grain of salt. But of course, it was pointed out to me in the classroom when I was teaching derivatives.
Oh, of course. Was that the same person?
You see what those guys said about? No, it's a completely different person.
Is that the same person who called you a child molester because you dared to talk about contango and backwardation?
Oh, forgot. No, I didn't talk about contango. What I did was I said that a death cross in VIX is when the trend works to the downside, because that would be I talked about a death cross but being opposite when you use it with VIX relative to the S&P 500, because they move in opposite directions. And yeah, some guy basically said I was a child molester because I was stating that wrong. I love that connection.
That tracks.
No, this guy, I can't even, and this says something. I can't even say what his Twitter handle is on the network without getting banned and getting the chat up in arms.
Right, well, then let's just leave it where it is. Then
let's leave it there. Although he just ripped on me again a few minutes ago.
Maybe you should think about blocking this person. Just a friendly.
No.
You do seem to attract an interesting element of the volatility crowd, sir.
I am a polarizing individual, and with that, talk to somebody else.
All right. Also joining us, here we are. We endeavor to create such a welcoming and open and inclusive community here. Nice people in our pro chat over there, all having a good time, ready to go. And here comes Russell, just bringing it down with his toxic vol bros he's bringing to the party over here. We'll keep rolling. Let's go. I'll tell you what. I said we're going to go in proximity. We're going to go a little bit farther, then come back to Chi-Town. So we're going to go out now to the hinterlands of Maine, the far reaches of the United States, right on the edge, the cusp of Canada, where we are joined once again by the rockingest of lobsters, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show. And do you have anybody stalking you on VolTwit these days, sir?
I have to say, Russell's a hard act to follow.
I am, aren't I?
He does bring the drama.
He is a hard act to follow. No, not really. I mean, I post some charts and a couple things on Twitter. I try to save the good information for the paying students, of which OptionPit has over 5,000 now. So I would rather save all of my things for them. But every once in a while, I'll post something up there. But I look at Russell's stuff, when he posts stuff. But I do not find him the Biden of VIX, though. I do not think that is an accurate portrayal.
Unless Biden had severe head trauma, then maybe the comparison is apt. As we roll back to the hinterlands of Chicago, I'm not sure who's farther out, Russell or him. I guess we'll find out as we are joined for the second time in a couple of weeks by our good pal, Mr. Scott Nations, the president over there at Nations Indexes. Scott, welcome back to VolView, sir.
Thank you so much. I'm still trying to figure out what being the Joe Biden of volatility or Joe Biden of VIX. I'm still trying to figure out what that means.
I don't know what that means.
Well, this guy has a bunch of Hitler pictures and stuff on his Twitter feed, so I'm assuming he thinks it's a negative.
Russell,
he also said that I had lost him. He lost so much money he had to pawn his wife's ring, and she left him.
Oh. Well, this is definitely a person you should be taking the perspective of and giving it full credence.
Absolutely.
All right, Mr. Scott.
Russell,
before we get
you
more
got
into
it made when you have haters on Twitter.
Before we get more into the Nazis of Twitter, Scott, last time you joined us, you were just getting ready to launch your new vol information service. It is now live. Give our folks a quick update. How's it going, and what can they get their hands on over there if they check out your service, sir?
Thank you so much. We are live at nationsindexes.com. So if you follow me or you follow the company on Twitter, that's nations_indexes, you've seen the sort of volatility indexes that we calculate and we provide for retail traders and sophisticated retail and some institutional investors. All of our volatility indexes, the goal is to quantify what has been subjective, allow you to see trade opportunities that might have been opaque before, and create better trade structures. So we provide all of our index values on the big ETFs and on the most dynamic single names. And so you can go there, subscribe, and for a short time, you can get 40% off your subscription if you use the coupon code beta, because we're still kind of in beta for another week or two. Use the coupon code beta. And if you don't want to subscribe, you can still go there and sign up for our Volatility Insights newsletter that comes out every weekend.
There you go, listeners. Check it out. Take advantage of the beta while it's in beta, as we keep on rolling right on into a little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we break down what the heck is lighting up our tape this week. And indeed, today on the Vol front, I like this comment in our chat. Who was that? Nichols. Vol Nazis love Russell. Yes, he does it right.
No! Opposite! Opposite!
He does attract, let's say, a select clientele of the Vol space, Mr. Rhoads. Oh, here you are derailing me with that.
There's a reason I didn't send it to you ahead of time. I wanted to catch you like this.
I'm trying to start the show. It's supposed to be Valentine's Day. It's supposed to be an air of love everywhere. We got Vol Nazis, all kinds of stuff derailing us here. But that is kind of funny. Mr. Nichols. All right. Let me see if I can do the rest of this with a straight face. Let's dive into what is catching our eye out here on the Vol front today and indeed this week. And, you know, we were talking the last couple of the shows. It seemed like we had the playbook. It was in. Something crazy would happen in the second half of the afternoon on Friday that would kind of spook the markets. We'd come in hot out of the gate on Monday. Markets would sell off. Vol would pop. And then it would pretty much reverse throughout the rest of the week until Friday. And then it would reset and do it again on Monday. And the same pattern would play out. We kind of bucked that trend this week. We had a lot of green on the screen, even though there was a little bit of whipsaw action intraday a few times. And Vol has mostly continued to trend lower. As of right now, we're just kicking off the show, so anything could happen, listeners. The worm can turn in a hurry out there. But right now, it seems like we are heading, of course, into that long weekend. Vol is continuing to come in. As we're kicking off the show, most of the major indices are pretty much mixed. A Dow off about 0.25%, NASDAQ up about 0.25%, and S&P pretty much unched. And VIX cash was at about a 15 even, right as we kicked off the show. That puts it down about exactly a point. It's actually drifting a little lower right now, sub 15, back into a 14 handle, which isn't the worst thing if I have a few VIX 15 puts in my back pocket for a rainy day. But I digress. We'll get to all that fun later on. And Vol VVIX itself at about a 96. And a good old VOLI. Ever since Scott joined us a couple of weeks ago, we've been adding VOLI back into the rotation. Of course, the just the facts, ma'am, straight at the money flavor of all things Vol. So if you want to strip out all that skew noise, if that's not for you, perhaps VOLI is your huckleberry. At 1175 when we kicked off the show, down about 1.5 points from where it was this time last week. All right, since I'm talking VOLI, let's go out to Scott first. Scott, another interesting week. It seemed like we finally bucked the playbook of pop Vol on Monday and then have Vol decline the rest of the week. What was catching your eye out there on the Vol front this week, sir?
The fact that Vol continues to sell off. I think the interesting thing today is that out of the money calls in the S&P, which until today, people just couldn't get enough of. They were buying them, they were paying up. And that fever's broken today. So that's our call dex. And again, this is available at our subscription service. Call dex down just over 4% today. That's a switch. People are kind of throwing in the towel on out of the money calls in the S&P. Certainly part of that is the 3-day weekend, but call dex is down more than all of our other measures at least on a percentage basis. And so you wonder if people don't realize that there's going to be more turmoil as far as rates are concerned than they had expected, and maybe being as wildly bullish as they had been so far this year is not really going to be the answer. So I think that's interesting. Overall, volatility is still very, very, very low. VOLI is at the 13th percentile right now of its 52-week range. That's really low. And tail dex, which is the cost of deep out of the money puts that would protect against a crash, not quite as cheap as at the 18th percentile of the 52-week range, but still pretty cheap.
Interesting. Call dex coming back to earth. Why would you want to have a few VIX calls in your back pocket over a long weekend, Scott? Madness. Yeah, the folks, their lack of reticence to just give up on vol upside at a moment's notice, always kind of surprised, especially down at these low levels. I get it. We are heading into a long weekend. People get spooked. They don't want to be caught holding the bag. But as we have seen, as Russell has proved many times with his secret weekend UVIX strategy, a lot can pop off in the vol market over the weekend, especially a long weekend, especially, dare I say it, when you have a person in the White House who likes to tweet a little bit and can say something completely out of left field that sends the markets into a tailspin. And when that kind of environment is out there, there has to be a little bit of extra, let's call it Trump premium on the vol upside, just because, you could get back up there at a moment's notice. Even though, like I have said many times, the last time Trump was in office, he killed vol with a pitchfork. So that can happen, I suppose, as well. But yes, just a wild to me how folks just give up the upside on a whim. Let's go out now to Mr. Rhoads, who, again, just attracting the best elements of the volatility audience. Mr. Rhoads, sir, what's catching your eye in the vol market this week?
It's really the elevated VVIX, the way it continues to hover around 100 regardless of what VIX is doing. And it's been a while because we haven't had low volatility to talk about, but sometimes when VIX is relatively low, and I just mean low relative to recent history, and the futures are at a reasonable level, calls will appear to be cheap. Because really, to get a call to pay off, you got to get a volatility spike. If you're thinking about holding something through or close to expiration, you've got to overcome the typical spread between the future and the index. And honestly, I've been breaking my brain trying to come up with a better option pricing model for VIX options that incorporates the index versus the future as well as another pricing component to it. But because I think that when VIX is at relatively low levels, but people are still worried about volatility, VIX calls look a bit more attractive, and that provides a floor for VVIX. So I know I don't follow the order ever, because I know we'll talk about options shortly, but that's the main thing that's been kind of sticking out to me. I felt like with the economic numbers we had this week that we would get more weakness out of the market. We definitely got it Wednesday morning in response to CPI, but like always, we rebounded right back up.
Yeah, you think we got some economic numbers that maybe would spook some folks, and they did for a short time. And then you're right, the red on the screen just went away. The bull cannot be denied right now. He has the bit in his teeth, and he's running up. At least not for today. He's kind of taking a little bit of a breather today, but we all know if the market's not rallying in this moment. If you don't like what you're seeing in the market right now, listeners, just wait 5 minutes, because it's that kind of market. All right, last but not least, we go out to the shores of Maine, a.k.a. the global mecca of volatility. Mr. Rock Lobster, sir, what's catching your eye out there in the vol market this weekend, indeed today?
Well, what is catching my eye on the vol market? The lack of participation in the VIX futures today, that's catching my eye. I think you got a 3-day weekend. I think I'm seeing 9-day VIX is as low as 11 handle, 11.99. So you've got, I think the weekend is, if they haven't taken all of it out, I mean, there's probably a pretty good amount of it. Waiting, I think, to be honest, if you're trading, you're like, okay, when's the next announcement going to drop from the White House? I'm going to wait. Okay, is he going to drop one at 2? You're going to drop one at 2:30? And then all of a sudden we'll see probably vol collapse from 3 to 4. But at least kind of the short-term options. But it's, I think there is a heavy amount. I think did Russell mention that? But like 3 from VIX to July, there's 4 points of contango in there. So like back month vol has a serious bid. This is I'm going to say it's just no messing around. Normally, I think this curve being this steep is more like when VIX is 12. So yeah, I'm just going to say that the market is expecting more volatility for a longer period of time. Generally, from my observation, because all the stuff I know is by observation, is we're expecting like a more orbiting market where we kind of have a lot of daily volatility, but we don't really go anywhere, which seems to be, if you look at since the inauguration, basically, you're kind of like there's the pre-inauguration market, then there's the post. Like we kind of hit this 6,100. This has been sort of the upper bound. We have not really been able to break through it. We hit it, then we dropped down to 5,900. We've had a lot of seesaw, a lot of daily action, but not really going anywhere. And I think part of that is there are some big things afoot. There's this Doge initiative to try to save money, and Congress apparently doesn't like the idea. There's a lot of federal judge. It's a little bit of a show, and I think that just generates and then we have let's just say the mercurial nature of our latest president, who it's not unfamiliar, but tariffs and stuff like that. And I think yesterday, like the latest tariff thing was forming a committee about all the countries that give us tariffs. We're going to give them tariffs back, maybe. So it has been a little less, instead of just tossing the tariff on, maybe they're going to look at it a little bit, and maybe some kind of, we'll just call more traditional negotiations amongst trading partners might happen. So that might bring the vol. I think that might bring some intraday volatility down. So I think are we a month in? Nah, not quite a month in. Yeah, close. And seeing how it's all going to go down. But I mean, for the most part, volatility is, I think, a little higher than it was a month ago. At least it feels that way. And the market is okay. We're pretty close to all-time highs again. So I would say it's just the volatility is starting to price a more orbiting market. That could change. And the character of the curve is more for a 12 VIX than a 15. But maybe 15 is the new 12 under the current president. So we'll see. But I think a lot is hanging on how much the government can, if there's any real teeth to this Doge initiative, and we can get spending back to a reasonable level. We'll take a reasonable deficit now. But $2 trillion a year in deficits with no COVID, no war, no nothing is, all I can say is there's got to be room to cut something in there. And I think the bond market wants that. So bond market stabilizes, we'll probably see VIX head a little lower. And that's where I am currently on this whole thing.
I like that. Mercurial. That's a good adjective to describe.
Trying to thread the needle on that one.
That's a good one. That's an apt one if ever there was one. Let's keep rolling out to the land of the volatility surface. See what we're spotting out there this week, listeners. And on the show last week, we were hanging out not that far away from where we are right now. Obviously, the front portion of that curve coming in a little bit. The Feb future down almost a full point, about 0.95 or so as we were kicking off the show. I'm sure if I racked that right now, it'd probably be exactly a point. And the March future down about half a point. But as you keep scrolling out, you go all the way out to October, which, as you'll recall, throughout the show last year, listeners, all eyes were fixed on the October future because that was the election bump. That's what people were pricing in for the election. This year, we don't have that obvious catalyst. But that October future is kind of remaining stubbornly firm. In fact, actually ticking up slightly. We're at a 1935 on the show last week, 1945 in the October future, so slightly higher. So we got that kind of funky curve, which again, kind of reflects what we've been saying here. We're heading into a long weekend, so it makes some sense that they're taking a little bit of vol off the top right now in the front portion of the curve. But longer term, we do have that mercurial president in office, and you never know what shoes might drop out there. Mr. Scott, we'll start with you, sir. Anything catching your eye in the vol surface this week, sir?
If you look at the term structure of Voldex from 7 days out to 360 days, it's shown very little volatility. So the term structure has shown very little volatility. Which is surprising, particularly given what we had again on Wednesday with CPI being a gut punch to equities, the market coming back following PPI on Thursday. It's a little confusing because all of those revisions to the December data were decidedly more inflationary. But so as far as the term structure of volatility is concerned, we've not seen very much volatility recently, even when we should have. And I think that's an opportunity for people to put on what I call time calendars. When something, if the market's not going to move when it should, well, you can get there first and you can put something on. That might be a really interesting way to play some of these. So again, time calendar, buy something reasonably dated, selling twice a little bit further out than buying longer dated. You generally end up long Vega there, which is probably good given where volatility is now. Only other thing I would say is that while volatility in the equity space is pretty low, or equity index space is pretty low, in other assets it's more moderately priced. So Voldex on Treasury bonds at 13.5 that's the 31st percentile of the 52-week range. So if you're worried about volatility in Treasury bond space, and you probably should be, or you think that we're going to have some more volatility, which we probably will, then that is someplace you can play. Also, Voldex on gold, 61st percentile, as gold makes new all-time highs. So Voldex on gold, 1575 right now. Again, 61st percentile of the 52-week range, which is telling you something. Not the world's biggest fan of gold as an investment, but as a trading vehicle, there's probably something there for everybody right now.
That's funny. We brought that up on our This Week in Futures options show yesterday as well. Vol was getting annihilated across the board. We used the C-Vol there to analyze the commodity vol, but obviously same thing over there with the Voldex on gold. But the one complex that was spiking, pinning the needle for the week in vol was the metal. So yeah, kind of a fascinating thing. If you want to go deeper into all the metals vol, listeners, check out what Scott has cooking over there. Voldex on gold, kind of intriguing. I know a lot of you like the precious metals. I'll have to get our buddy, Mr. Uncle Mike. He likes silver. Maybe we can lure him to the dark side of Voldex on gold as well. Mr. Rocklobster, same question for you, sir. What's catching your eye out there in the vol surface this week?
Well, like I said, I'm curious on Russell's thoughts here, and we got Scott. So these are all good vol heads for this. And none of us look like Joe Biden, by the way. Is just again the steepness of the curve and how much how much volatility it's just a lot of higher vol in the term structure, considering how high VIX is. Like, I guess kind of relative, like it's around closer to 15 and how much the market is still pricing vol in the terms after, and you get pretty juicy futures, juicy VIX readings. So again, it's not surprising, because I feel like if you calculated vol on the intraday move, I feel like realized vol would be closer to, I actually had a number on it over the last 2 weeks. I think realized vol, if you use like an ATR calculation, the range of the day, it's probably, I got to pull that sheet up. Was closer to like 18% or 20%. So it's definitely moving around. So if you trade intraday a little more, you got a lot more opportunity there. So, and I think the term structure volatility is reflecting that. Now that could change relatively fast. Again, based on, government politics, some of all this other stuff, it could happen. It could change. But as of right now, there is some, let's just say that traders are not letting that long-term vol go cheap. That's what I would say.
That definitely appears to be the case. As we were saying earlier, the longer-term portion of the curve slightly juicier than it was this time a week ago. All right, last but not least, Mr. Rhoads, sir, what is catching your eye out there in the vol surface this week?
Sorry, I was taking a nap.
I was going to say,
because I'm the Joe Biden of VIX.
Oh, that was. You're just living the gimmick today, huh? You're really just going.
Well, the thing is, I've known about it since Monday, so I've got all kinds of ideas of how to stretch this one out. I think Joe Biden of VIX is going to be the. Who is the Joe Biden of VIX might be a good show title. What I was doing, I was doing some of the data. Actually, the reason I was distracted, I was doing some of the data work that I always like to do when I'm on here. I should be a desk quant once again. I always liked working on the fly like that. Took a look at the VIX curve basically on Valentine's Day. For those of you guys that maybe forgot, today's Valentine's Day, get on it. But looked at the curve on the closest day to Valentine's Day over the last 5 years. And of course, October was sticking its thumb up ahead of everything else, or sticking its finger up above everybody else. Last year and back in 2020, October was still at a slight premium on the non-election years. And, memory serves me right. That's always been an instance. And it really I think it's a seasonal thing. We will, at least my generation of market folks, will generally equate September and October to the riskiest times in the markets. That's not necessarily quantitatively true, but I do think that always seems to show up with a boost in VIX. VIX always seems to have a bit of a tailwind around those 2 months, and then starts to work its way lower as we get into the last couple of months of the year. So the October future in 2020 on this day was at a $2.40 premium to September, 1720 versus 1960. The other years it was like maybe a half a point or so, looking like it does now. So I do think that there's some normal seasonality to VIX and the VIX futures, and that's just something that we typically see with the September and the October futures contract. If I had all the time in the world, I would create a volatility traders almanac like the stock trader almanac that they have, that talks about all the seasonality, et cetera, associated with VIX.
Let's see what we're seeing out there in VIX itself this week, listeners. Is it a banger day out there in VIX land? It's pretty decent given the fact that we're heading into a long weekend and the markets are mostly unched today. It's kind of interesting. Almost 600,000 contracts on the tape already, 589. We'll get to what's driving all that in a little bit. The ADV also maybe reflecting the fact that we're heading into a long weekend, coming back down precipitously this week, down about 73,000 contracts to 843. Still a lot of paper, obviously, but we were well north of 900K this time a week ago. So interesting to see. Of course, last week and this week, indeed, a little bit quieter earlier in the week. We didn't have all the obvious catalysts that we had, even though, earnings season is popping off out there right now. So interesting stuff out there. ADV coming in. Maybe you could argue VIX got a little bit ahead of its skis with a 925 ADV or something like that. So we'll see. We'll see if we can revisit those numbers or if we're going to settle down a little bit. We'll also see what is comprising our proprietary VIX Top 10 TM indicator out there, listeners. Cost you 202,000 contracts to break into the top 10 in VIX land this week. By the way, we are hanging out 8-2 calls over puts right now. So for all of you out there who are saying, man, vol's coming in, it's got to be a put palooza out there this week. Only 2 puts to be found in the top 10 this week. So maybe hold your horses there. Number 10, 202,000 of the Feb 19 calls. So kicking it off with all things considered and given a lot of these other strikes, a fairly reasonable strike. Number 9, our first of 2 puts, 204,000 of the Feb 15 puts. Who would want some Feb 15 puts? What kind of a monster would buy some Feb 15 puts? Number 9, 204,000 of those bad boys. Number 8, 211,000. Here we go. The Feb 60s, right back to the fun, listeners. Number 7, 217,000 of the April 20s. We talked about these. These have been open for a little bit. So if you like the Feb 19s and you like that strike range, but maybe not enough duration for you, allow me to present number 7, the April 20s. Number 6, 218,000 of the Feb 23s. Number 5, perhaps one of the most reasonable strikes and options on this board, 234,000 of the Feb 17 puts. Those are sure looking pretty good right now. Number 4, 311,000 of the March 20s. So April, a little bit too long for you. Here come the March 20s. Number 4, 311,000. Number 3, 346,000. You know the other side of this stuff now, listeners. It's the March 60s. We've had these 30 60s in March and February going up and rolling and adjusting for a little while. Because number 2 is 373,000 of the Feb 30s. And the big dog out there this week, listeners, 374,000 of the March 30 calls. All right, listeners, now it's that time. The time you've been waiting for, except for those of you out there in the fringe of vol Twitter. You probably have been dreading this moment because it is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, all of you vol Nazis out there, it is time to cower in terror because the once and future Dr. VIX has the microphone. Have at it, sir. The floor is yours.
One of the things I'm hurting myself with on this is I've really been trying to get VIXies like the Swifties to catch on, and Vol Nazi is ruining it. Not a lot going on in weeklies this week. So Tuesday, nothing really good happened on Monday. Tuesday, we've seen people buying puts in front of settlement, and somebody bought 900 of the February 12th, which is Wednesday expiration, 16 puts for 37 cents. And they did this when VIX was right around 16. Some of it was done when VIX was below 16, some above. But the VRO the next day was 1669. My thinking, and this is my weekend research project, is we often get CPI on a Wednesday. Not every CPI report comes out on a Wednesday, but a good number of them does. And I wonder what that does to VIX settlement. Compared to the previous day, is it always slightly higher? Might there be something to do there? Can you buy a straddle around that because the overnight change is a bit more than normal on CPI day? So I didn't like that trade. If I buy a put into expiration, I want to buy a put that's deeper in the money, that maybe has a little bit of negative time value. Like if I had bought these 16 puts for 37 cents, I'd like to have seen spot VIX around at least at 1560 or so, just to give myself a little bit of a buffer. But I'm going down a rabbit hole with respect to Wednesday VIX settlement on major economic number days. How's that? So then Wednesday we got the CPI, which I like, which was a gut punch that we recovered from quite quickly. Remember Harry Houdini back in the day? He had really strong ab muscles. He would let anybody punch him in the stomach that he wanted to. And the market acted like Houdini because it took the gut punch and rebounded very, very quickly. Early in the day with VIX at 1638, about 15 minutes into the trading day, somebody was expecting some follow through with VIX. They bought 900 of the February 26, 28 calls for 28 cents. And then finally, finally today, a trade that if the trade I just talked about works out, this one might work out as well, but I severely doubt it. Or no, this one would actually get hurt. But I severely doubt it's going to get hurt. Today with VIX just a little under 15. Somebody sold 200 of the February 26, 45 calls for a nickel. That's an opening position, and it didn't look like it was tied to anything else. So, somebody's trying to take in $1,000 and hope that nothing bad happens in the next couple of weeks.
All right, let's keep on rolling. See what else lit up our tape out here in the world of VIX options this week, listeners. Like we said, today a decently hefty day, all things considered. Nearly 600,000 contracts on the tape right now. The big dog today, about almost 80,000. 79,000 of the March 23s going up today. That's all opening. By the way, if you're wondering, they went up in most of them in a block, 70 almost 1,000. 69,754 in a big block this morning for 83 cents. You like that, listeners? Lifting the offer for 83 cents? That might be a fun little flash poll to put out to you folks. Are you a buyer of the March 23s for 83 cents? Are you a seller? Does it just not interest you at all? Do you prefer it as part of a vertical? Maybe we'll put that out there. Either way, that's number one today. Number two, 39,000 of the March 20s. Number three, 39,000 as well of the Feb 28s. Interestingly enough, opening on the Febs. Kind of strange. Number four, he's got 20,000 of the Feb 19s. And number five, 20,000 as well of the Feb 21s. Thursday, we had not much action on the tape yesterday, even though we're close to the levels we are right now. 624,000 contracts on the tape yesterday. The big dog yesterday, 47,000 of the Feb 22s, followed by number two, 35,000 of the Feb 16 puts. Number three, 31,000 of the March 20s. Number four, 27K of the March 23 calls. And number five, 26,000 of the Feb 16s. Wednesday, 600K seems to be kind of the magic number this week. Wednesday, 606,000 contracts on the tape. The big dog, 36,000 of the Feb 16 puts. Number two, 34,000 of the March 40s. Number three, 29,000 of the Feb 15 puts. Number four, 26,000 of the Feb 19s. And number five, 24,000 of the Feb 20s. Tuesday, breaking away from our 600K magnet. Only 485 on the tape. The big dog, such as it was, 20,000 of the March 17 puts, followed by number two, 18, almost 19,000 of the Feb 60s. Right back to the fun, listeners. Number three, about 18,000 as well of the March 35s. Number four, 16K of the March 16 puts. And number five, 16,000 of the March 45 calls. Interesting. So if the 60s a little bit too far out there for you, maybe you like the March 45s instead. Monday, getting closer to that 600K level, 566 on the tape. Again, you can see why the ADV is coming in this week, listeners. The big dog, 56,000 of the Feb 25s. Followed by number two, 33,000 of the Feb 20s. Number three, 25,000 of the April 19s. Number four, 25,000 as well of the Feb 42 halves. And rounding out the top five on Monday, 24,000 of the Feb 35s. Mr. Rock Lobster, kind of I won't say sleepy, because it wasn't a sleepy week. I would say a mild, dare I say it, almost disinterested week from VIX options. Anything catching your eye out there in the VIX options land this week, sir?
I'd like to say yes, but I was in Baltimore all week. However, there is some open interest. There was some action, buying some puts, thinking that we would get something. Thinking we would get a rundown. And I haven't seen it materialize yet. So there is some buying of VIX puts, but we're not getting that, we're not getting that real rundown of action that I would have thought we would get. So again, I'm surprised by the way that the long-term volatility is held up, but I mean, we were market makers. We all know vol doesn't go down until somebody sells it or the market stops moving. So there was enough intraday volatility this week to keep it up. So I did see a little bit of action in VIX puts, but I have a feeling there's going to, there's going to be some sadness. I have a feeling those 15.
I was just going to say, don't say it. Don't you kibosh? Don't you kibosh those 15 puts? How dare you?
I'm not closing my 15.5, so I don't care. But I have a feeling because I think the mark on the Jan cycle was pretty. Didn't they mark it up $1?
Yeah,
that was a surprising. I think that was the high tick of VIX for like 2 days. Was the opening print? I know the SIBO tries hard to try to keep these things relatively clean, but that was a surprising high print on the last VRO. I have to admit.
Dare you talk smack about the market's beloved Feb 15 puts and VIX? I'm not saying I like them. I'm just saying I know people who like that. I'm just putting it out. A friend of mine.
I know people who know people.
Yeah, I know people who know people who like the Feb 15. So how dare you besmirch them? I'm offended on their behalf.
Tempting for a nickel, I gotta say.
Yes. And the second we get into settlement, here comes the Trump tweet. Oh, VIX settles at 1730.
Yeah, 1725. There you go.
That could easily see that playbook playing out. Yes, but
yeah, that's what the market's saying right now with VIX trading 1480, 3-day weekend. You can buy all you want at a nickel on the Feb 15.
Yeah. Isn't that crazy? All you want at a nickel, listeners. Get in, roll the dice. Get in. The water's warm. It's
get in while the water is warm.
It's very fun.
Warm,
pleasant.
warm.
It's pleasant water. All right, Mr. Scott. What, if anything, is catching your eye out there in the world of VIX options this week?
Well, first, I got a question for Russell. I'm no Houdini historian, but didn't he die because he got punched in the stomach?
He did indeed. Yes.
Okay. When it comes to volatility today, I think this week. I think back to what we used to say in the pit, buying when you can, not when you have to. I think that's why vol is kind of holding up. I don't think anybody wants to wake up on a Monday morning after some, goofy geopolitical thing over the weekend and feel like an idiot. So they're willing to pay a little premium. Although I see that in the April 200 strike in the VIX calls today, somebody bought 50 of those. That's not what I mean when I say spend a little premium. I do not mean buy the 200 strike calls in the April expiration.
You love pointing those out. That's your favorite. I catch your Twitter. You've always got some crazy VIX call you're pointing up there. I love it.
Or crude oil or gold. I don't get it. I think I know what's going on with some of that stuff, and it's not purely economic. I think sometimes people are trying to kind of game their risk system and kind of head off the risk manager in the back office, but this seems like a goofy way to do it.
By the way, I like the Houdini theme for today's show because he did die from a deadly vol gut punch. There we go.
That's what I thought.
I like it. He did. He got a little bit too big for his britches. He thought he could withstand all of it, and that last one proved fatal out there. So don't let the next volatility gut punch prove fatal to you, listeners. Has it proved fatal to Russell's beloved product known as SVIX? Let's find out. 26.5 when we kicked off the show, listeners. That actually puts it up about half a point, which means SVIX is doing what it's supposed to be doing. Vol's coming in. SVIX should be moving up. It's still hanging out at about 26.5 here on the latter portion of the show. The issue that has bedeviled this product for a while continues to do so, which is just no options paper whatsoever. Only 1,750 contracts on the tape right now. It doesn't seem like it's even going to hit its, again, reduced ADV of only 5,500 contracts. That's down another 1,300 from this time last week. So nobody is trading SVIX options right now, except for Mr. Dr. VIX, who continues to override his upside. Mr. Dr. VIX was catching your eye in SVIX this week, sir.
SVIX right now, and I don't have any calls outstanding on it. I was short the 26 calls last week, and it didn't get called away from me due to late afternoon weakness. And you like to call it sacred. Everybody knows sacred. I share the UVIX trade with everybody. The UVIX trade did not work well last weekend. I'm debating sticking with that And the reason that I am debating sticking with that is I'm systematically long index options every single day now, and those don't diversify each other very well. So I got to see how they work together. Because I do, I'm always talking about being short S&P futures, but there are a bunch of other things that are going on as well. And some of them are likes it when the market goes up, and some of them don't like it when the market goes up. But buying straddles on a daily basis has worked very well in SPX, NDX, and RUT for the last 18 months. And until it stops working, I'm just going to keep doing it.
All right, since we are kind of come up against it, I will combine all of the remainder of the vol ETPs together. Then we'll get everyone's thoughts on what's left out here. UVIX 2730 when we kicked off the show, down almost 1.5 points. Again, you're having the same problem that SVIX has, not exactly lighting the world on fire when it comes to liquidity. Only 7,000 contracts on the tape when we kicked off the show. That ADV is only 14,000 a day. If that sounds low, it's because it is. It came in almost 50%, down another 13,000 contracts since last week. So, yeah, the liquidity issue is starting to become a bit of a concern out here. Unless you're going out to UVXY, this is where the UVXY Defense Force says, hey, I'll raise my hand. We don't have those issues. 18 even when we kicked off the show, down about 0.75 point. 51,000 contracts on the tape when we kicked off the show, listeners, and that has increased to 76,000 now. So UVXY continuing to put up the numbers. The ADV is 98,000, probably going to hit that today. That's down about 4,000, but still looking pretty robust out there. So again, the one trump card that UVXY holds in its back pocket is that people continue to trade it. So as long as that persists, you'll always have that. And then VXX 42.15 when we kicked off the show, down exactly a point from where it was this time last week. Doing about 18,000 contracts when we kicked off the show. Let's see if it's put up any more now. 22,000 on the tape right now. The ADV is 34,000. That's down about 1,000. I don't think we're going to get there today either. It is a shortened, or I should say, it is a holiday weekend out there, listener. That's going to be light volume today as well. And in general, it's kind of been a light volume week. Scott, anything catching your eye in the world of vol ETPs this week, sir?
I think it's interesting that we're seeing relatively little volatility, or relatively little volume, rather. And I wonder if the people who used to play in that space are now in zero DTE options and SPY. I wonder if that's where that's going, because we now see zero DTE option volume in SPY regularly, more than half of the total volume on any given day. Some days it's as much as 60%, and it's no longer falling off on really volatile down days. So I wonder if some of these vol ETPs aren't victims of SPY zero DTE option success.
Great thought. That's a great thought. Yeah. I love it when, No, yeah. That's an awesome thought.
And that's, we've been speculating that for a while, right? That does serve a similar use case and a similar purpose. And obviously the volume there is taken off quite a bit. So maybe it is cannibalizing all these other vol ETPs. Is that you, listeners? Have you had some of your otherwise vol ETP liquidity cannibalized by some of these other zero-day index products? I'm curious. Hit us up. Let us know. Mr. Rock Lobster, you get the last word, sir. Anything catching your eye in the world of vol ETPs this week?
No, I know that was a good observation, actually. I really didn't think about why nobody came back to them, but I think people have been, they got stung by them, and the SPY, the best thing about the SPY, it's a SPY. It doesn't, it is reliable. So that is the reason why maybe that volume never came back. Plus, figuring out how they're going to move is always so funky. So that's a good, I like that one.
I'm glad you guys like that, but why are you so surprised that I had a good point?
I don't know. It's like almost like you make all these vol indexes or something for a living. I don't know. One thing I will say, another thing is look at VXX over the last 6 months. You want an observation? That product is doing what it's never done before, which is not go down. So the biggest observation I could give you is the 6-month chart looks like, VXX is down since August 13th. It's now officially down, although it was about flat. I mean, it's only down, what, $7 for 6 months, which feels like about $20 too little. So maybe we were finally coming down to the VIX futures going for a little melt. But I think a big part of the problem is we weren't getting the action we were getting before in them. So that might be another part of the problem.
All right, listeners, now it's time to get difficult. It is time to get dangerous. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, welcome to the crystal ball. And we give the CBOE a hard time about their vol settlement. It's time for our VIX settlement to see who the winner is on the show this week. Last week, it was myself, it was Dr. VIX, and it was the meatball. And we were all over the place on the vol circuit, which is kind of what makes the show fun. I was feeling more juice at the end of the week, 17 1/4, which obviously is incorrect this week, listeners. We're coming into the end of the show, 1485 now in VIX, so below that 15 handle. Get those Feb 15s for a nickel while you can, listeners. All right, Russell was at a 1647. No joy for either of us. The closest was the meatball doing his palindromic nonsense at 1441. Maybe if we wait around till the end of the day, maybe the meatball will come into winner territory. But alas, that is not the case. So no winners right now. Our producers will go through all of the listener submissions and the live chat pro member submissions to see if we have anybody within the margin of victory, in which case you too can win fabulous prizes. But no winner this week, listeners, which means, and the closest was the meatball. So that means the Rock Lobster, you get the reflected joy, sir, of going first. What are you feeling for this time next week on the vol front, sir?
I was thinking of, I don't know if I could do palindromic. I'm going to go 1402. 1402. I just don't see anything on the calendar that's going to move the needle.
Interesting. 1402. All right. And I guess the next closest was Mr. Dr. Vic. Sir, what are you feeling this time next week?
57.
One more time, sir.
Yep. 1447. Did you get that?
47. All right. Interesting levels. A lot of 14 handles here. Not surprising. We are hanging out in the 14 handle. I'll buy Scott a little bit more time. I will go next. And yeah, interesting. I'm going to buck the trend. I'm going to say we get a little bit of juice back, but not a ton. I'm going to say this time next week, 1535 with of course a blip right on Wednesday settlement to about 1730 and then right back down to 1535. I've been around the block once or twice, Mr. Rock Lobster. I've seen this movie play out before. All right, Scott, I bought you as much time as I can, sir. What are you feeling for vol this time next week?
I'm looking at VOLI and VIX both being lower right now. Tail decks being higher. Call decks getting killed. I think there's more concern. So I'm going to give you a twofer. I think VIX will be at 16. And I think Voldex, ticker symbol VOLI, VOLI, will be at 1260.
Oh, twofer. I like it. 16 in VIX, 1260 in VOLI. Listeners, if you're listening live, get your guesses in. If you're listening after the fact on the podcast, make sure you send them in. Questions at theoptionsinsider.com. Hit us up on social media as well. If you get them in by the end of the day, you too can win fabulous prizes. All right, that music means we have come to the end of another volatility journey for this week. Man, it started off crazy, took some gut punches in the middle, and we're ending up equally fun. Quite the journey out here on the vol surface this week. Mr. Scott, hit us again. If folks are intrigued, they want to check out your brand spanking new data service, sir, where should they go? What should they do?
nationsindexes.com. You can sign up for our free weekly newsletter. You can subscribe for fascinating, insightful, unique volatility products in real time. But if nothing else, sign up for the weekly Volatility Insight newsletter. We talk about our products. We talk about macro issues and what's happened in the market and what's looming. and I think it will always be insightful for people.
There you go. Check it out. Check out the newsletter, and then maybe kick the tires and light the fires if you like volley and everything else we were talking about here throughout the show. Then check it out for yourselves there, listeners. And Mr. Rock Lobster, sir, where should folks go if they want more Rock Lobster volatility goodness in their lives?
Yeah, optionpit.com, all my products. You earn while you learn. Learn how to make money and trade at the same time. Option education, trading, all that kind of stuff. And I trade all positions myself. So we're all going on the ride together, which in general makes pretty good money. So if you want to learn how to trade vol, trade options, optionpit.com, 888-TRADE-01, 10% off anything you heard here on this show.
Don't let him fool you, listeners. He is half of the OI of those Feb 15 puts. That's all Rock.
Yeah. Thankfully, this cycle, I am not.
Check him out over there, optionpit.com, to learn more. And last but not least, Mr. Dr. Vic, sir, if folks want to check out your volatility musings, and maybe they're not of the toxic variety, where should they go? What should they do?
Considering it now, but everything I do, I put out there on Twitter. And, so that's the easiest way to keep up with what I'm up to. This coming week, if you're an IU Bloomington student, I'm speaking to the Research and Trading Club all about VIX on Tuesday night, room 100 of the Psychology Building. Boy, that was academic sounding. And that's the main thing that I've got coming up in the near future. And maybe I'm going to discover something about CPI and VIX settlement this weekend. That's my big plan this weekend.
Ooh, exciting. I like it, sir. I might come down to Indiana just to heckle you. It'd be kind of fun to heckle you live, sir.
Welcome to. There are lots of people that want to heckle me. That's for sure.
Clearly.
We know that.
We established that at the outset of the program, sir. In the meantime, listeners, if you're not of the toxic variety, if you're one of our nice vol listeners, head on over there, give Russell a follow on Twitter. 2 S's, 2 L's, RHOADS, or on Substack as well. If you're one of the vol Nazis, then maybe go find somewhere else to have some fun. Speaking of having fun, we did get the flash poll posted right at the end of the show, listeners. We said the March 23 calls traded in VIX this morning 70,000 times for 83 cents. At that price, are you a buyer? Are you a seller? Or are you not interested? Or you prefer it in a vertical? And right now, exactly half of you, again, it's only been live for a few minutes, 50% of you want to buy them. 25% want to sell them, and about 12.5% each say you're not interested or you prefer it as part of a vertical. That went live. That'll be live the rest of the day, so you folks in the podcast can play along too. Speaking of the podcast, that will conclude our on-demand business here on the network for this week. Thanks for joining us. If you want to keep the partay going, you want to join us for Options Oddities in a little bit, only one place to go, theoptionsinsider.com/pro. is the place to go to get beyond the velvet rope. Remember, we are off for Monday, so no option block. Rock Lobster's happy he won't have a chance to lose in an 80s trivia contest, as well as no crypto rundown. Don't blame me. It's President's Day. Markets are closed. But we're here again with all the rest of our usual content throughout the week. You're getting your futures rundown. You're getting your options boot camp. You're getting your option block episode 2 on Thursday with the Flow Master. You're getting This Week in Futures options. And then, of course, we're back again next Friday, another episode. Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.